Zoom threw me out, so I'm going to be able to do just the first two intro problems with you in this video, and then I'll finish with another video that will finish up the others. Professor Schoenberg should be able to also help you with the beginning exercises in the book. So if you'll just follow me a little bit, let's go ahead and finish up our gross profit calculation that we were working on before Zoom threw me out. Okay, so hang on a minute. Let's see if we can get back where we were. All right, so back to where we are here. We were trying to figure out gross profit. We were given amounts of cash sales, 182,900, credit sales, 557,400, and we had to add those together to get total sales. And then we had to subtract cost of goods sold. Please know that at the top of a multi-step income statement, it does not have a negative to remind you to subtract cost of goods sold. You're going to have to memorize and understand that costs always are subtracted from revenue. Gross profit is a subtotal, right? It's just a subtotal. It's not an account. So what they want here is, what is the gross profit? I've put it in my Excel spreadsheet, but I'm going to do it again. So in these Excel spreadsheet problems, you must put a formula in for it to grade properly. So we're going to put equals, open parentheses, start with cash sales, add credit sales, close parentheses, minus cost of goods sold. Okay, so yes, I've just verified what I found, right? So now I can close my Excel and put in 207,300 as my first answer to gross profit. So once again, memorizing and understanding this calculation right here is going to help you tremendously. Okay? All right, the next one is about a purchase. All right? So what I want you to do is get out that exhibit that has both the buying and the selling on it, right? Both sides. Go ahead and get that out so you can follow along with what side we're on. So if we're buying, we're purchasing. So you will follow the buyer's columns there. Okay, so where was I here? Just a second. I just had it. Okay, there it is, dual nature. This, like I said, this is a very good exhibit, exhibit 10, and I gave you a copy. So we're going to be following this column, right? Okay, so don't worry about the shipping point thing. We'll get there. But this invoice, let's go ahead and look at this invoice for number 2. Okay, mine says that the Barnes Company purchased merchandise on account from Salik Corporation for $5,200. The terms are 2 and 10, in and 30. So this means there's a discount being offered, a discount by the seller, which we are not. We're the buyer. Okay, so within the discount period, we are Barnes, return merchandise with an invoice amount of $1,200 and receive full credit. So unfortunately, with products, returns happen. Okay, so we have to be able to account for that from a buyer's point of view and a seller's point of view. And then Barnes is going to pay the invoice within the discount period. So what is the discount? It's 2% if we pay within 10 days of the invoice date, or we can pay the whole invoice and we can have 30 days to pay it. Okay, so most businesses try to take advantage of whatever discount the seller is offering So here is a little invoice payment calculator that I made. And this took me a while. But if you want to write these things down, when you get an invoice, sometimes it'll definitely help keep track of what's happening. So I'm going to start with my invoice total. My total before any returns was $5,200. Then they said we did return $1,200. So that left an invoice remainder of $4,000. We're going to pay it within that discount period within 10 days, and we get to take 2% off. Well, if you think about that, if you take 2% off something, you're paying 98% of it, right? So put your percentage. If there's a discount, put your percentage, and then take 1 minus your percentage to get how much of the invoice you are going to pay. And then I have a little calculation here that tells you how much the dollar amount of the discount is, but this is the invoice amount to pay, right? When you take the 2% out, by taking 4,000 times 98% gives us a cash payment of $39.20. Okay, so that's what we're putting in here. But I would also now like to show you from a T account point of view how this is going to work. Okay, how this is going to work. So let's start off with buying the merchandise. We're the buyer. So it goes in merchandise inventory. We bought it on account, right? We return an amount. So whatever we return have to come out of inventory. And we also want to make that come out or go out of accounts payable too. So we're down to $4,000 in accounts payable, and merchandise inventory is $4,000. So when we do the return, the question is, what account is debited by Barnes Company to record the return? Recording the return, we actually debit. Here's our debit, here's our credit. We're actually going to debit accounts payable. That was the question. But I'm going to finish this off. Okay, I'm going to finish this off, even though the next one, number 3, is going to be sales transaction, which I'm not going to have time to do on this video. But I do want to show you how this would work in the T account. So we've returned it. Okay, we bought the merchandise on account. We've returned it. Now we're down to paying cash. Okay, so hang on just a minute. That's not the right amount. So we have the accounts payable sitting there at $4,000. We calculated $80 is our discount amount, right? So we're actually, when it's time to pay this accounts payable, time to pay it, we got to pay it within the 10-day discount period. We're not going to pay the full $4,000, but we still have to make this $4,000 go down when we record the cash. So here's what we're going to do. Here is the amount we're going to pay in cash. So down goes cash for that amount, and I'm going to put $39.20 here. Okay, so here is the journal entry to make the payment of our invoice with the discount of 2% in the discount period. So here's how much we're going to pay in cash. We already determined that back here. Okay, then we have to make accounts payable go down because we're paying for that, and we must make it go down by the full amount of accounts payable. So when we look, so far we have 2 entries. We have a debit to accounts payable of $4,000 and a credit to cash of $3,920. Well, that does not balance, right? The difference is that $80. The $80 is actually going to be, we need one more credit of $80 so that we will have a balanced transaction. All right. So don't have this in a journal entry right now, but I do have it in the T accounts. So let me move this down one, and it'll make it look a little better, okay? Because actually our merchandise value gets brought down by the amount of discount, okay? So, all right, let me see if I can make this happen without too much trouble. All right, I want this all on the same line. So once again, when we go to pay our payment of $39.20, we're going to pay in cash. So down goes cash, and down goes accounts payable for the amount that we owed on the invoice, right? And then that didn't balance, so we needed another credit. And then now our merchandise inventory has actually a different balance. So it has 5,200 minus 1,200 minus the $80 discount. And now our merchandise inventory is worth what we're just about to pay cash for. Yep. Okay, that's all I've got. I'm sorry I don't have any more time. Thank you, Professor Schoenberg, for helping us. And please look for more videos for the intro exercises and the coursework. Okay, so I'll stop my share and say goodbye. Have a good fall break and carry on. We're moving on. Thank you so much. See you next video.